Let's get in Vaibhav Sanghavi, CEO of Ask Hedge, to talk about how is he viewing the scenario currently. Vaibhav, good having you. Thanks for joining in. You've run a long short fund successfully. I believe you probably still have that option. I would love to know, how are you viewing at that opportunity in the Indian markets currently? If you had a chance to be short, would you be majorly short, or would you believe the bulk of the damage in the last 800, 900 point correction is behind us?
See, I think apart from what earnings had to deliver, I think the events, if we kind of line up, then major of the events, to be very honest, are now behind, including your tariffs, geopolitical concerns, and whatever we may name it. I think are something which we are at this point in time from year onwards. We don't see any of those kind of things kind of coming back now. In some sense, we can always say that the worst possible outcome is pretty much on the table. And in light of that is where the markets are. So possibly, I think, with some volatility on the downside, I don't see much of a, further reaction kind of coming, from an Indian market perspective because of this event. Of course, what is more important to monitor is basically what's happening into China. The Chinese policy and the flows which are moving towards China within the emerging markets.
Vaibhav, so, okay, that's an interesting way to think. If the worst of the outcome is on the table, yes, agreed. Are the markets pricing in currently the worst of that outcome, or are the markets thinking that, okay, the worst of the outcome is on the table, but we believe that the eventual outcome will not be as bad?
Of course, see, because worst of the outcome is pretty much on there. Anything which has to happen from here onwards has to be better in that sense. Of course, there are few sectors under Section 232 which may further see some amount of news flow if it comes through. But I think most of it is pretty much off the of the desk in that sense. So markets, in my view, from a sentimental impact perspective, has already factored in the worst of the outcome. I'm not saying that they are factoring in any recovery at this point in time, right? So if there is a positive news, which is either suspension of that tariffs for at least in 60 days, 90 days, depending upon how the negotiations kind of come about, then you may see some amount of positive reaction coming back to the market as well.
Okay. Vaibhav, what have you made of the results thus far? I mean, are there any green shoots? Are there any, or are you also in the camp? We were talking to Gautam Duggad of Motilal yesterday, who said that while their estimates are 12%, all the client meetings that he did, most of them said, "5-6% se zyada nahi hoga." Where are you on that argument?
See, I think you are absolutely right. The buy side would love to be a little more conservative than the sell side in that sense. But my view is that I think, more importantly, there is diverse, set of earnings, in the sense that we have seen some weak earnings coming from, IT pack. There is some amount of weak asset quality concerns coming from few select banks and probably NBFCs. But apart from that, I think the larger private banks have kind of given a pretty good picture. Larger infra companies have been doing pretty good, and consumption has kind of kickstarted the earnings pretty decent, in line with the pre-quarterly updates as well. So my sense is basically from an index per se, if you look at it, IT, we have seen a very huge correction post the kind of numbers. Right. I'm not sure whether we have seen the stabilization as yet, but at some point in time, the free cash flow yield kind of starts to kick in, and probably people will see some amount of valuation which will start getting, cheaper. And as trade deals kind of, get better or get framed up, you will see some amount of discretionary spend coming back to the IT space as well. So that's a fluid sector which we are still neutral on. Private banks, we are turning kind of positive, especially on the larger ones. I think infrastructure companies, along with the capex driven themes, are pretty much on target to kind of deliver those kind of growth numbers. So I would be tilted towards probably double digit kind of earnings. I mean, of course, just touching about double digits. So I'm a little more positive than the other buy side street analysts.
Vaibhav, and this, of course, has just come in. HUL, fantastic numbers. That's moving quite sharply. Eternal doing relatively well, even on a turbulent day. You think the consumption story and domestic-focused consumption story is the best bet right now, even as what is happening all over the world and with the trade deal still has time to settle in?
I mean, we have been advocating the whole consumption theme for now a quarter or so. The main reason, of course, is beyond the tariffs and the uncertainty regarding that, is what we are saying is that at this point in time, the central government, the state governments, and the central bank, all of them working together to revive the whole consumption piece. Of course, from a central side, we have tax rebates. From the state side, we have welfare schemes. And lastly, from the monetary policy perspective, we have decrease in rates, decrease in risk weights on the loans, increase in liquidity on an overall basis. My sense is basically everybody focusing on towards reviving the whole consumption piece. Lastly, from a year and a half down the line, we may also see it, the pay commission kind of changes also trying to get affected in. So when we look at from 12 to 24 months perspective, I think the valuations are pretty okay. I'm not saying they're extremely cheap, but they are pretty okay, which is factoring in pretty subdued growth from a consumption stuff. So my sense is because of the under ownership, the tailwinds from a policy perspective, we would be surprised on the whole consumption aspect over the next 12 to 24 months.
Okay. What amongst consumption? Are you going for premium? Are you feeling a bit enthused seeing the kind of reportage from an HUL, Nestle not that bad, ITC was decent?
So I think it may start with consumer discretionary and especially the newer kind of experiences like travel and tourism, food, restaurants. People want to spend in those kind of areas, apart from the consumer electronics. So you may start with discretionary probably, and then on auto within the discretionary, especially on the two-wheeler side, is something which we do think that may gain some amount of traction. And then moving on to staples towards the premiumization theme. So it is that pecking order of you will see the transit coming about from an overall consumption basket.
Vaibhav, where would you be skittish on? I mean, and just one quick word. I don't know how you guys are thinking about positioning in pharma, because there seems to be an exemption. So even if the worst case thing is on the table, pharma is still up in the air, right? Exemption for now. Who knows what happens next? Are you positioning yourself in line with the healthcare index, or are you changing that exposure to pharma by not looking at the US generic exporters, but looking at maybe other healthcare index components? Like diagnostics, like hospitals, what have you?
Absolutely, Neeraj. I think let's understand this one thing very clearly, that US government would not want to antagonize their own citizens by making medicines expensive. I mean, this is the last thing they would probably want. So my sense is basically that this is the last sector. Even if it might get affected, it is the last sector it might get affected. And I don't believe that they would come out with aggressive, tariffs in the whole space. And generics, to be very honest, kind of provide the cheap medicines to them. So, in my view, I think this is a sector which may be insulated, as like an IT service sector as well, from the whole tariff piece. In addition to that, my sense is also that looking at the traction from a generic side, looking at the price stability, I think this is a sector, because of the extra pessimism which has had because of Revlimid, we might see some amount of bounce back or bargain buying probably happening here.
Okay, thank you so much, Vaibhav, for joining in. As we wrap up a power-packed session of India Market Open.